NYSE TV Live. Of course, we are officially open for trade. Stocks within striking distance of an all-time high. Inflation coming in a little bit lighter than expected, and that did pave the way for equities to rise in the pre-market. Well, joining me now to talk more about this market is David Stryzewski. He's the CEO of Sound Planning Group. Joining me in studio, David, welcome.
Pleasure to be with you.
Great to have you here. We've got two IPOs kicking off at the stock exchange today after Circle's successful debut last week, and stocks here at all-time high. How does this market look to you?
You know, the market right now is kind of interesting. I mean, I vote it goes up forever. And in fact, if we see it finish above the 200-day moving average here this week, I think it will really pop. You know, we've seen a very strong V-shaped recovery. I do believe, though, that there's some few challenges that could happen or develop from here. So just be cautious as well and make sure that you got your anchors in place if we're going to be taking some long risk. Yeah. You know, but with that being said, there's a lot of things that are very positive. This deal with China is certainly going to be a positive move because we have answers now about how the world might be moving forward. We'll get some new information on PPI tomorrow, on how the producers are doing and how this is ultimately impacting them. And they're looking at things. But, you know, overall, I'm optimistic, especially in a long-term basis. But I'm cautious right now at the same time.
How are you advising your clients? Of course, we know you from your many appearances here on our show, working mostly with those boomers and people that are thinking about retirement if they aren't in it already.
You know, for boomers and those that are nearing or entering retirement, very important that they pay attention to a couple things. One, the biggest risk that they have is a big downturn within the last 5 to 10 years of their working career, first 5 to 10 years of retirement. I call that the red zone, like the last 20 yards of the football field before you get to the end zone. There's certain plays teams only use there. There's certain things you need to make sure you do right in that last 20-year time frame here of contributions and then right into retirement. We have big losses in the stock market. That's your biggest issue. If we lose 50%, it takes 100% to get back up to where we were. So that math doesn't work out when you need to start living on those dollars. I'm also very concerned right now about the bond market. Bonds can lose money in 5 different ways, and literally all 5 of those ways are blaring red lights right now. And so I'm concerned that there's going to be strategic bankruptcies that might occur given the rate of change with you know, interest rates. If you go from a 3%, 4% environment and you ratchet up, you know, another 3 or 4 on top of it, every 1% requires 10% more income. Who's making 40% more for sure? How is liquidity looking right now? This is not a great time for a lot of companies. And so I think that we need to be a little cautious. It's almost like the lag effect might show up all at once. You know, we've not really seen that from Jerome Powell's moves, even though they were very significant. It's because of all the printing and spending that occurred. And so some of that's drying up, some of that's changing right now. And so I just want people to be very cautious as we move forward. Make sure you have your anchors in place if you're trying to swing for the fences.
What are those anchors that you're referencing?
You know, a couple things that I'd probably pay attention to is that gold and silver really don't even have a place inside of 60-40. They're about to. Metal miners don't even have a place inside of 60-40 really. They're about to. Why? Metal miners have not seen the price appreciation that you've seen with gold. So the ounces in the ground are worth a lot more than what they were before, but the price to actually produce them is relatively the same. So you're going to see amazing earnings start coming out on these miners. They're going to begin to get popularity, and I think they're going to lead for probably the next 3, 5, and 10 years as our economy begins to develop. That would include oil and different developments, but you know, I love the new technology here as well. And so last couple points on anchors, be cautious about just going short on the treasuries because you're going to end up getting hit on taxes. Short-term taxes or capital gains are your highest ordinary bracket. And so that's not a good idea for a lot of people. They need to be looking a little bit longer term. And so there's alternatives out there like hedging strategies and things that people would want to be paying attention to very specifically because maybe your bond's yielding 4 and your advisor charges you 1. That might be 25% of your overall yield. So people need better ideas today than maybe what they were when we could get 8, 9, 10% and that 1% fee was being charged. It didn't seem like as much.
Let's talk about how inflation fits into this picture because we did see it come in a little bit lighter than expected. And in fact, at least recently nearing the Fed's long-term 2% target, despite concerns that it could tick up due to trade later on.
Well, you know, so I love the cooler inflation read. It maybe has a little bit of a warmer tenor as it might move forward into the future. And so that's the part that we don't know exactly. Seems like the Mar-a-Lago Accords or these China deals that are getting figured out might give us a little bit better understanding about how we'll move forward to the future here. But I think overall, there's going to be a very positive thing that happens, even with the taxes that just got passed right now. That's probably going to be one of the biggest boosts to the average family. You're going to work a little harder at overtime, no more taxes on your overtime. Hey, you're going to take a second job being a waiter or a waitress, guess what? No taxes on those tips. So those that want to do the hustle thing are going to be rewarded for their family and the different things like that. So I love policies like this that are going to incentivize people working a little extra, working a little harder, because that's what the average person's doing. They're not trying to quit. That's not the American way. But we're at a point right now where we really need to see some innovation. I think we're going to see AI ultimately integrate in, and that gives us more supply side on the dynamics here, which ultimately lowers prices for producers long term, maybe gives us the ability to pay higher wages. And I'm just really hopeful that some of those innovations that are coming out can lead us into the future here.
All right, David Stryzewski, CEO of Sound Planning Group, joining us in studio this morning. David, thank you.
Pleasure's mine. Thank you.